Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session again on this Sunday afternoon. And huge congratulations to all people who are watching this for the gold medal by Neeraj Chopra yesterday. Honestly speaking, I thought that he might come up short because of the kind of field that he was competing in. But he has done magnificently to stay its course, just like Aditi Ashok. That Aditi Ashok knew her limitations and ended up fourth in the golf event. Neeraj Chopra went ahead and did what he does best, is to reach around that 87, 88 meter mark and produce the throw that would win him a gold medal. So he just went consistent with his performances over the last 3 years, what he did in Sweden, what he did in Finland, what he has done in Prague, what he has done in the Commonwealth Games or the Asian Games. And it has been an effort of around, I would say, at least 5 years since the Junior World Championship, where he broke the world record in 2016. Uh, for the last 5 years, the way he has performed is magnificent, and that has culminated into a medal. So normally, when people say that how would we bring medals into any sport, it takes time, it takes years of effort uh, to reach that level. The hockey team did it, and the hockey team did it on the back of some very solid performances from 2017-18 onwards. For the last 3 4 years, they have been doing extremely well, beating Netherlands and Germany consistently, and then they ended up beating them in the Olympics quarterfinal. It doesn't happen in one go. The women's team did it after faltering against Ireland in the Commonwealth Games, after faltering against Australia and Great Britain in the Commonwealth Games earlier. So it has been effort of the athletes, along with along with the associations. So we all brag against, or go against the associations this way and that way, but it has to be lauded the way Neeraj Chopra has been given the facilities and the chance to train in Europe. The way the hockey team has been given opportunities to tour Netherlands, Belgium, and Germany and play against their women's side, as well as Argentina. So they were touring all across the world. Even in the COVID times, they toured. Before that, they toured even more. And that is how you bring in medals. And that's why a note to probably the Football Association, All India Football Federation, that they need to send teams to Asian countries. India has two matches against Nepal next month, probably as warm up matches. They need to bring in better competition and send teams for tours abroad, even if that means playing against under 19 football teams of that countries. Send them to European countries, send them to probably Caribbean countries like Jamaica, Trinidad and Tobago, etc., which are uh, around our rankings and all. I'm not saying that you will get opportunity to play against an England under 19 team or a Danish under 19 team in football, but that's what football needs. So that came to my mind. So last time around, football was India was not represented in football in Asian games, although it should have been, the way India has been performing on the Asian stage. So that needs to be taken care of. Otherwise, in all sports, India have done extremely well in Olympics, and most of them, even in swimming, they have done exceedingly well by at least one or two athletes beating the national record. I know that in the 5,000 meters, the national record was broken by the male athlete, and that, sorry, the Asian record. So in the 4 into 100 meters, where our four athletes did very well to finish fourth in that heat, and just by probably, I think, 200ths of a second missed out on a finals berth. They did very, very well to beat the Asian record. Aditi Ashok finishing fourth in a battle in which we had we had the world number 1, the world number 11, the world number 27 fighting against world number 200 Ashik. Aditi Ashok has done extremely exceedingly well out of 72 competitors fighting, and there is no elimination or finals for 8 people and all that. So there were 72 of them fighting it out for 3 positions, and she finished fourth. The fencing player did extremely well. Bhavani, I think that's her name, to cap it off with one win. So we are doing extremely well in sports, and that is extremely good. All right, now coming back to stocks, and I hope your all investments are doing well. So one thing I want to say about the markets over the last 8 9 years, what I have felt is that August has always been a very difficult month. If you see, if you look at the records over the last 8 9 years, so what has happened is in August September either there is consolidation or decline, whether it is in mid and small cap or in the major, you can say stocks. So we are seeing a decline in the mid and small cap index, and that is fine, and that has to be there. And once that probably ends, then we will see a major run in the mid and small cap stocks, again the quality stocks. So it is very good to see some consolidation and decline. I would like to have that continue for at least a couple of weeks, and then you will see the big move. As far as many of, you can say, investors are asking me whether this is again 2018-19, we don't know. We'll only know after a year and a half whether this is the beginning of that period, and whether the small cap and mid cap will go through that phase of 2018-19, or we are in the phase where there will be correction for a couple of weeks and then there is surge. I believe in the latter, because I think most of the stocks which are in the mid and small cap are waiting for things to open up, rather than making money when things are closed down because of the pandemic. So I think this is just the beginning of a major move, and it would be good that in 2 weeks probably there'll be another 4 5 7% decline in mid and small cap index, and then you will see the firepower after 2 3 weeks, because things are improving with 30 to 40 lakh, you can say, uh, jabs being taken and vaccination being done. Things are improving. We will have a third wave that looks like, but it may not be that severe. I really hope that it will not be that severe, and once we are through that, by next July, you will see a totally different market, and you will see the traveling industry, hotel industry stocks, all these recreational stocks, and other businesses, the consumer stocks, the Batas of the world, and the other consumer stocks depended on the complete opening up of the market, continue to do well. So I think this is just a blip that may happen for the next couple of weeks. And then the journey will continue at least till 2023. That's my opinion. July of 2023. So next 2 years could be still very good, and you need to understand that the last phase of any market, if I'm saying to 2023, if that does happen, although again take your own call with your own analysis, but if 2023 December, maybe end of 23 early 24 could be the start of a bear market phase because of the election or some kind of correction, then we will have the major up move that will take place around 2023 July till the early part of 2024. So that's what I believe in, and I'm biased because I'm more into the market. So if you are more into debt, more into gold, etc., more into other kind of, you can say, businesses, you might say that the market is expensive, but I think next 2 years, 2.5 years could be huge, and the last 6 months of that 2.5 years could give you one of the best returns that people might have looked at in 2007 8, from 2007 July, June, July till 2008 January. What happened, I believe that could take place between 23 to early 24. The only, and there is always risk, the only biggest risk in that is that once you look at the US rate, and the rates could be hiked at that point of time. So that is the risk out there. Otherwise, domestically speaking, things will be rocking at that point of time. I'm pretty confident that by early 23 the pandemic would have all but subsided from the country. So that's my opinion. Now, coming to the focal point of, you can say, the topic that I put up, that concentrated portfolio, best returns with less risk, but there is a issue. See, I have always believed in having concentrated portfolio. I have tried in 2011 until 2013, around those 1 2 years, by putting in or distributing whatever funds I had into 18, 20, 25 companies. It has not worked. And immediately I switched it to, and I have said that many times, I probably shifted to one IT company, that was Tech Mahindra, during 2011, 2012, and just stayed the course and got the shares of, so got into Tech Mahindra and Satyam, not because Tech Mahindra was going to buy Satyam. It was just that Satyam was technically doing well, and Tech Mahindra was doing fundamentally and technically well. And then eventually we came to know that Tech Mahindra is going to buy out Satyam, and Satyam shares zoomed, and we got more Tech Mahindra shares and all that. And so that's how the journey started. That taught me one thing, is that if you are confident, even 70 80% on one share, and you are very confident on that, and you believe it can give you returns, may not give you huge returns, but will surely, that you are confident will give you positive returns, it won't make you losses, then it's better to put in more money, as much as you can, on that bet, and sit on it, rather than distributing your money and hoping that one of those 4 5 stocks will become a multi bagger and you'll make big money. I hope you're getting my point. I have gone after percentage returns. Percentage returns do not make you money. What makes you money is to bet big on 1 or 2 companies, 4 companies, 5 companies, 8 companies, maybe, depending on how much money you have in terms of that. And just putting in big money into it, huge money into it. So, for example, distributing your 100% capital into 5 companies, and even in that putting in 30 35% in one stock. See, I'm not recommending you do it. I would recommend you distribute 10% in each, 5 to 10% in each. But if you want to make things very big with low percentage returns, then you need to put in more money. So I hope you're getting my point, what I'm saying here. So if you put in 1 lakh rupees into 10 stocks with 10,000 each, and 8 of them do well, 2 don't do well, and 8 of them on an average do 20% in a year, then you end up making something like, from 80,000, 1,60,000, and in two you lose. So suppose you lose some 10 20%, you end up making around lakh or 80,000 rupees. That's about it. And you pay taxes. It comes down to, if you're making 80,000 rupees, you're making at least 73,000 rupees or so, or 72. Now, taking the other scenario, if you have 1 lakh rupees and you put in into, say, 2 companies, and you're sure that, okay, it's not going to give me, say, 30%, it's going to give me, say, 20, it's not going to give me 20%, but surely 15% is going to come out of both the companies, then you are going to uh, end up making, you can say, on that 1 lakh rupees, a good amount of money. So that is my call. That is my call, that if you put in more money into less companies, which you are sure of, and that is where the dilemma is, which you are sure of that you're going to get a certain return, that, okay, this company over 4 5 years will do that. That is where huge money of wealth is created. Wealth is not created by distributing a lot, or you can say over diversifying. I'm all for diversification. Even with 3 companies you can diversify, by buying an IT company, by buying a pharma company, by buying a consumer company which is into a number of businesses. In that sense, you can buy an IT company which is large, a pharma company which is a mid cap, a consumer company which is a small cap, into different businesses. And you can still diversify and still keep a faith that if pharma does well, one pharma will do well, IT does well, you have an IT firm. And if the whole market keeps doing well, a consumer company that is into 3 4, you can say, streams, may end up doing extremely well. So diversification is not just about putting in, say 10 lakh rupees into 20 stocks. Diversification is all about putting in money into different, either asset classes or in different sort of sectoral stocks, so that your risk get mitigated. Now, Why concentrated portfolio is not being taught by many of the analysts or on television or etc. is because of the fact that if your one company really do badly, most of the retail investors do not have the gumption to take the losses. That's first. Second, the time to look at what is going on. I mean, if the market or if there is some announcement by the company that gives you an idea, a red flag that you need to exit the company, you're not able to because you are not into stocks. You are basically into a job, into some kind of other work. And that is why a caution here is that you need to have concentrated portfolio only when you are able to take care of all sorts of announcements and developments into those 3 4 5 companies, whatever companies you are putting in money in that concentrated portfolio. Otherwise, you pick the best of the 15 20 companies, you pick a nifty ETF, you pick a mutual fund which is fine, and invest into it religiously over 10 15 20 years, you will make money. But here what I'm trying to talk about is somebody who can spend time on stocks and yet diversify. That won't help you, that won't help you in the long run. So if you are having 10 lakh rupees, if you're having 1 lakh rupees, 5 lakh rupees, whatever, you can spend time on stocks. I mean, by spending time, I mean on a weekend, on a Saturday and Sunday, you can spare 5 hours, 2.5 hours each day in analyzing companies. So if you are having 5 companies, you should be having at least 30 minutes to understand, is there any announcement, what I have been the results. If there is no result season at that point of time, is there any announcement in the stock? How is the stock doing technically? Where is it headed? Has there been anything announced in terms of buyback, etc.? Has there been any big deals in the company? Has there been anything in the industry? It will take you 30 minutes per stock to do that. For 5 companies, it will take you 2.5 hours. So if you want a concentrated portfolio, you have to take care of it. But that once you are able to master that or able to align with that, you will be able to make a lot of money. Because the only risk, when I'm saying, and I have written there in the heading as well, the only risk here is that you should have a decent time frame. Pick the best in the business, have a concentrated portfolio, and have a decent level of time frame, not 1 or 2 years, but at least 4 5 6 8 years. Even if your returns come in early, it doesn't matter, but your time frame should be between 3 to 6 years, around that. So just to give you an example, and again I'm giving you an example of Kilpest. I'm sorry for that, for all the you can say monotony about it. But since I have studied the company thoroughly, and anything can go wrong with any stock, and I have the right to be wrong here. But after a total analysis of the company, and me and my friend, we 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 understood that rather than putting money into 4 5 7 companies, 8 companies, uh, in order to make money, and hoping that those companies produce good numbers, and each time the numbers come up, we just hope that okay, this time around it gives this profit and this, and the companies keep on disappointing. Let's buy a company we believe in, that this is something that could do well. And we didn't know about this pandemic or anything. This was 2018. But the company per se was producing 40% net profit margin, 60% operating profit margin, 30 to 40% growth, and was trading at 9 times earnings, at only 9 times 1 year forward earnings. And that's where we said that there is a huge discount, not a small discount, a huge discount. It was just a 70 crore market cap company when we invested in. Today, it is a 500 crore market cap company. That's where then you need to put in the big money. So those on Patreon know about my portfolio, know about my allocation, etc. I won't go into that. If you want to really look at my portfolio, be a member on Patreon, and you will be able to look at my portfolio thoroughly. But that's where you need to then understand what should be the portion size of your investment. Whether it should be small, and then later on, okay, when it goes up, we'll invest. The, these stocks will not give you opportunity. Those that could be big going forward, could give you very decent returns. That's where you need to put big money. and just hope and wait for results. And if results are good, market is bad, then things happen. What happens with us? What happened with us? So we invested, we were doing okay. The stock was neither going up or down from 2018 till 2020 March. In fact, during that phase between 2019 October till 2020 March, when whole market went up just before the fall, sorry, 2020 February, just before the fall for the pandemic, everything went up quite well. These our stocks did not go up, neither go down. And then the pandemic hit us badly, and these stocks, apart from that, I had a couple of more stocks in the portfolio. So I had three stocks, all fell. Our portfolio was down 50%. So what needs to be done there? What needs to be done there is all everyone will say that invest. But what about those people like us, like me, that we didn't had the money to invest? So the second best thing you can do is just wait. We thought that okay, 3 years maximum, it will take 3 years for the pandemic to end, so the market may be down for 3 years. Let's not do anything. We don't have the money to invest, otherwise we would have invested. Second thing, if we don't have the money to invest, so let's not sell anything at 40-50% loss. Let's wait it out. Let's see how things happen once the pandemic is over. And we gave 3 years in our minds, and that's where I'm saying that you should have a time frame of 3 to 6 years. We gave that okay, 3 years, after 3 years we will have some money in hand, somehow survive the next 3 years, from 2020 February till 2023 July. That was the target I had marked in calendar on my Excel. I had marked the 3 years time frame in terms of days. So 1,000 days, 1,000 or 1,500 days was marked in there, and I was ticking every day, coloring every day. Eventually, what happened was it took just 2 months, not 3 years, but 2 months, from March, maybe even 1 month, for things to reverse. Once on April 1st, the announcement came out. So these things happen. We didn't knew that such kind of announcement of Kilpes would come out, or anything will happen with Tanla, or other things will happen. We thought that okay, we are not selling for 3 years because the companies are good. So that kind of conviction, if you have with some companies, I'm not saying small cap, even with larger companies, and if you have the conviction, go big on them, and then wait it out if you are in losses, if you think that the company is going to do well. Otherwise, if you don't have the conviction, don't do the thing what I'm saying at the moment. So that's where the disclaimer lies. If you if you have even a little bit of doubt, do not invest big in those companies, otherwise you will eventually lose. But if you are convinced about one company, and I'm not saying any small cap, say for example an Asian Paints, a 22% CAGR return, if it can give 22% CAGR return, then you can make, so not 22, maybe 18, 19%. So if you have 10 lakh rupees, rather than doing for 10 stocks, buy an Asian Paints for 10 lakh for a 19, 18% return. And just an example I'm giving you, if you are sure about returns, pretty sure about returns, although in this market nothing is absolute, then go ahead and invest big into such companies. That's the call I would like to make. So there was a super chat contribution from Ramadeen. So what do you feel about FLQ1 results? Results are not great. It is not at all best, but it's not very bad either. The stock has fallen. It may fall 5 to 7%, may not fall as well, because the stock has fallen a lot. So it all depends on, it is very relative in nature. If the stock was at 52-week high, I would have said that yes, there could be a good 15-20% correction, but it is already down 15% from the top. In that sense, results are not extremely bad. It is slightly, you can say, slightly out of range. We may see a 4 or 5% fall, and that will be a buying opportunity, gradually buying into the stock. That would be my call on something like an FL. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature, that will help me grow the channel, that will help you also ask me questions and eke out answers in greater detail. Acracil is good. It is up 8-10%, I think, in a last day, or I think on Friday, or before that. I would say it's a very good company. that could go to 1,000 in a year's time or so. That doesn't mean you go ahead and buy now, wait for declines to probably buy into. HCL Tech, I won't say is the best of the companies. L&T Infotech is a good. That's my call. Glenmark Life, very little data available. I need to check everything and only then I can let you know about it. All right. Black Rose, I don't track at all, so I cannot comment. That's my call. India Pesticides is good. If you have a 3 4 year view, you can gradually invest into it. Some now, some on declines, and keep on buying here and there on market declines. But have a long term, pretty long term view on something like India, this chemical company. Polycap is good. Polycap is a very, very good company. Again, on declines, probably is a buy. I don't know the price at the moment, but 1900 2000 could be good levels to buy. Suven Pharma, if you hold, then hold onto it. If you don't hold, don't buy into it. That's my call. I think so. An opinion on pharmaceuticals, although it is doing well, I have a feeling, a gut feeling that the pharmaceuticals may not do well in the very short term. So be careful on that front. India Mart fundamentally is good, but it has run up a lot. Even at 26 2700 when I first talked about it, 27 2800, and it zoomed after that when I talked about it that look, it is looking good. It has already gone to 10,000. It has been 4x from those levels, which already was 4x at that point of time. It has gone up a lot. So it's better what you do is probably avoid the stock at these levels. That's my call unless more consolidation comes around. Okay, thanks for your contribution, Gopi Chan. uh, Nuclear Software is a very, very good company. 596 is your price. What I would recommend is go ahead and probably buy into the stock on any sort of major decline in the stocks. I'm just opening up the charts for Nuclear Software and I'll let you know. But overall, fundamentally speaking, the business and everything in this IT firm is pretty good. It's one of the better mid cap IT companies, as is a Birlasoft or a Happiest Mind. So Nucleus is right up there. So just let me open up the charts and I'll let you know as to how things are with it. So that's why it's taking time. Basically, what I would like to say is that if you have it, hold on to it for a longer period of time. And I just want to give you a stop loss, and that's why I'm just waiting for it to settle down the laptop itself, and then let you know. So currently, Nuclear Software is around 670, 680. Since you said your buy price is below 600, that's what you said, 596. So that's a decent level that you have bought into. Hold on to the stock, and if any declines that come around, you need to buy into the stock. I'll just give you some levels on it. So around 650, you can buy into the stock whenever those levels come around 650. Your stop loss is 570. So your stop loss is 570. You buy more around 650-ish level. All right. So there are more questions that are coming up. Petronet LNG, good company from a very long term point of view, not on a short term use basis. More than relaxed, so the valuations in Bata looks good. So I would say go ahead and buy into Bata. So that's my call there. Uh, Frontier Springs will perform from 2013 onwards. Sorry, 2023 onwards. Just have some patience and you will know about it. And Newgen, I would say Newgen, a good level to buy at would be something in the range of. I'll just let you know. So need to just check the prices. So Newgen Chemicals, I think you're talking about. It has gone up. I think any range around 860, 870. So any kind of 4 5% decline from current levels is a good buying opportunity. Around 870, 860, you can go ahead and buy into something like a Neogen. Prince Pipes is good. On declines is good. Another thing I want to say that pipe companies may continue to do well going forward. So yes, just that you need to wait for major fall in the market to buy. I think August September would be the good time to add on to these kind of stocks. From October onwards, these will perform even better. So yes, Prince Pipes, good buy. Sequence Scientific at current levels is a buy. 280, 275, very good levels to buy. Even now at 290, 295, it's buy. It's just that the results were slightly off target, and that's why the stock went down in that phase. Just before results it went up, so it's a buy at these levels. All right. FL I have already talked about. Vishaka, I have no comment to make. All right, guys. Thank you. Thanks a lot for being online. Thanks a lot for supporting me, and a huge thanks to all the Patreon members who are supporting me there. That is keeping me going financially, mentally as well. It gives me a lot of you can say encouragement through that. Support me through Patreon. Like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thank you.